Bless Squad, what's going on with y'all, man? It's your boy, Blessed Applesauce, here to bless y'all with another video here on Blessed Doing Best. And today, as you can see from the title, we are here to talk about how to make $100 a day in the stock market. And I'm looking at my computer now, as y'all can see, because I want to show y'all what I went over today, what I was looking at in the market to make $100 every day, and how you can repeat this process every single day. But before we get into it, make sure you spam a like on this video, spam the like button, and also sub down below for more content like this, because we're continuing to pump out content to help y'all become profitable traders and make money in the stock market. So what we want to do when we're making $100 in the stock market, we want to be consistent. So we want to have a consistent game plan and identify what we can do consistently that will consistently make us money. There's a lot of consistency there, but that's what it's about. It's about consistency. So if we want to make $100 a day, we have to ask ourselves, how much capital do we have to play with? If you are playing with $100, if you're playing with $200, if you're playing with $10, I have to be honest with you, $100 may not be possible. To make $100 a day, you're going to have to maybe need a couple $1,000s in your account. I say 5 to 10 grand in your account to make $100 a day. If you do not have that, you can still make $50, you can still make $25, and you can eventually build up to $100 a day. It's just going to take a little time for you to build your account, which is fine, but you're still going to follow the same principles that I'm going to lay out. So make sure you stay tuned through the whole video so we can get you up to $100 a day. I know a lot of these gurus out there like to trade options. They like to trade really risky stocks, and they like to put out names that are just not reputable, and they give you strategies that the average person just cannot do consistently, and they're growing their accounts really fast. Yes, they might take $100 and grow it to $100,000. Yes, they may do that, but they're using extreme risk to do that. So on average, I'm going to recommend, if you want to make $100 a day, make sure you put about 5-10 grand into the account. With that being said, when you put your 5 to 10 grand in, you need to identify areas of value. You're going to want to find areas of value where you can take trades off of, because we don't want to get into random places. We don't want to just be buying because we feel like it looks good, or selling because we feel like it looks bad, or whatever. We want to find, again, consistent levels we can play off of. And how are we going to do this? We are going to look at support and resistance lines. We're going to look at supply and demand levels. So with this stock, this is something I traded this morning. We can look at the supply and demand levels. So imagine this section is not here. Let's zoom this way just so we can imagine this is not there. Voila. So this is what we were looking at this morning. Okay. So when we're looking at this chart here, we're looking at the supply and demand zones, and we're going to use our trend line key here to find them. So what I did in the morning, I said, boom, this is the high day. 1360 is the high day. The next key level is right here, 1339. The next key level right here is from the previous day. That's 1260. Again, we have another level right here from the previous day, 1275. And you can see on this level right here how this bounced. It was at the high. Notice how it also bounced right here. So people are looking at it. That's what we need to identify. Again, we can take a look at level right here. We have 1230. We also have this level right here of $12. See, notice a whole dollar level begins to bounce. And also, once we have all these levels, we also want to put our whole and half dollar levels. So we're going to put $13. We're going to put $13.50 on there as our key level. And we are also going to put 12.50. There we go. We're also going to put 12.50. And again, notice how 12.50 also lines up with that there. So after I have identified our key levels, these are our support and resistance levels that we have looked at. Here's another one right here at 1325. After we have identified these levels, we know areas of value that people are going to be looking at. So as you can see, let me change my key. As you can see right here, it bounced. Right here it bounced. Right here it bounced. Right here it bounced. So we know buyers and sellers are getting aggressive around those levels, and we want to look at those levels and try to create trading systems and trading strategies off of that level. What I do for my strategy, I trade in a range. So I make a bet in the market, a high probability bet that the market is going to stick within those trading zones. So when it hits a resistance level, these blue lines here, I am making a bet that it's going to stay, it's going to hit this resistance level, and then it's going to fall back down, or it's going to hit the support level and push back up. That is my bet. With this in mind, when we are making trades, when we're buying and selling on these levels, because these are the only levels I buy and sell on. The blue lines that I identified here are the only levels I'm buying on. I don't care about any other level. If another level pops up, I don't want to see it. I don't care, because it's not a high probability area. But when I am buying there, I want to create some risk parameters around it. So the goal with trading, you do not want to risk more than 2% of your capital. Let me repeat that again. You do not want to risk more than 2% of your capital. People get into errors where they are risking 5%, 10%, 20%. And that's how you blow up your account. If you watch guys that are trading and they're risking 20% of their account, a lot of times they're using leverage. A lot of times they have a high win rate type strategy. A lot of times they're risking it all just to make it look cool on YouTube. This is not about making it look flashy. This is about consistency. This is about making $100 a day consistently. Simply not risking too much, managing your risk. And we only want to risk 2% of our capital. So how are we going to do that? We are going to position size. If you have not seen my position sizing video, make sure you go check that out. But we are going to position size on this level. So what I did this morning, let me zoom into one of the trades I took. After we have all these levels marked out, let's do that. Okay. After we have all these levels marked out, we can see how the market began to open. So this line right here, how it goes from light gray to darker gray. This is the market open. 6:30, the market open. So what the market did originally, it dropped all the way down here, and we can see how it dropped to this level that we have previously identified from the previous support and resistance lines we looked at before. It dropped to this level, and it began to consolidate a little bit. And we say, okay, that is a key level we would like to identify. We would like to take a trade on this particular level. So what I do, I'm looking at these key levels. When the price gets here, I'm looking at these key levels, and I want to put my risk underneath these key levels. So if I'm hopping in right here at 12:30 because I see price has made it to 12:30 and I've identified this is a key level I want to get in at, I'm going to put my stop loss below here, and I'm going to position size in. So the amount of shares I'm going to buy is going to be based on my account size. Again, refer to my position size calculator video to understand how many shares to buy. But I'm going to buy the amount of shares needed based on my account size, so I'm not risking more than 2% of my account. Once I do that, I hop in this trade, and I'm going to give myself a 2-to-1 risk to reward. So if I'm risking this right here, let's say I'm risking 1% on this level here, and let's say my stop loss is here, my target is going to be 2%. So I'm going to be trying to get out right here. If I can get 3%, 4% more, that just makes my risk to reward even better. But the goal minimum is going to be a 2-to-1. So I want to get in and make at least 2% on my money, which is right here. Voila. And that's what I did today. I got in around 12:30 and I watched it pop and push, and I made money on the day. And with these levels, you do not want to just get in blindly just because it dropped to $12 or $12.50, which we identified. We're not just hopping into this. We want to see some type of confirmation. Confirmation can come from a lot of different ways. You're going to watch a lot of different YouTubers talk about confirmation. This is critical steps, super critical. You're going to have your level of interest, 1. You're going to have your position size, 2. And then you're going to have your confirmation. So you have your setup and your confirmation. Confirmation comes once it gets to this level. You're waiting for a signal to happen. Me personally, my confirmation signal is on the level 2 and tape. So I am looking at the level 2 and tape and saying, okay, confirmation occurred right here, right on my level that I was looking at previously. Confirmation confirmed, and I'm buying in based on the indicator that I saw on the level 2. Other people, this is purely based on your trading strategy. Some people like to use the EMA. So this right here, this blue line is the EMA. People, how they use their confirmation. Let's say it hits their support line right here. Let's say they're looking at the level here. Their confirmation to get into the trade is when it breaks through the EMA. So if you were an EMA confirmation person, once it broke this EMA, you would hop into the trade and you would ride it up to 2%. Some people like golden crosses and stuff like that. Your confirmation is really going to depend on you. I might have to do a separate video on the types of confirmation, but for me personally, my confirmation is the level 2. I like to see buyers and sellers stack up around those levels to confirm to me that they actually want to get in. But if you want to use an EMA system to get in, that is fine as well. So you will get in right here. Once it breaks, the price breaks the EMA, and you will hop into the trade and you would have made money. Also, they have a candlestick confirmation as well, where people are looking at candlesticks and they're saying, okay, this is a red candle, but it got bought up a little bit. This is a green candle. It looks really strong, and then it gets really strong here. That would be their confirmation. Whatever you use for your confirmation, make sure you stick to that. This is a system of consistency. You're consistently looking at your same levels every day. You're consistently risking only 2% of your account. You're consistently using confirmation to get into your trades. And you do that every single day, and you will make $100 a day consistently. So I want to look at the very next trade that I took here. I took this trade on the short side. I took this level right here at 1325. I was looking at this level that we identified here. And once it pushed through, this was a really nice trade because once it pushed through, it immediately rejected. And I was looking at this level and said, okay, this is a level of interest that I identified, 1325. Boom. And the tape, my confirmation indicator, the level 2 on tape, immediately confirmed to me that this is a level of rejection. So I was able to take this thing short, and I wrote it down all the way to here with the 2-to-1 risk to reward. I think I made a little bit more than 2-to-1 on this because my risk was up here around 1340 level, and I wrote it all the way down to 1270. So that's what you want to do. You're identifying these levels. You're marking out these levels, these support and resistance levels, and then you're looking for confirmation. You wait for your confirmation. Like, boom, that's what happened here. You dropped all the way down to 1190 around your $12 level. Boom, EMA pops up. That could be your confirmation level, and boom, you ride this up. So that is what you're doing to make $100 a day. You are identifying your areas of interest, your supply and demand levels. Voila, you're setting your risk parameters in place where you're going to take a loss. So right here in my example, I would have took a loss down here if it failed me, and I would have made money if it went up here. And then you're 3, you're waiting for your confirmation. Confirmation is critical. It will avoid you getting into random trades and trades that are not valid. You wait for your confirmation, then you hop into the trade, and that is how you make consistent $100 a day. Please leave a like on this video if it helped you out. Let me know if there's any other things you have question wise. And this is about consistency. I know a lot of gurus out there, again, a lot of gurus out there will be posting flashy cars and flashy this and that and saying, oh, I made $1,000. I flipped $200 into $1 million in 2 weeks. That it is possible. It can be possible, but it's unrealistic and the risks are way too high because you can easily blow up that money. This is a consistent way to make consistent money very easily and confidently come into the market and say, okay, I'm going to make 50 bucks today. I'm going to make 100 bucks today. Just do it this way and it'll be nice, easy, and consistent. But that's going to wrap it up for the video. It's been your boy, Blessed Applesauce. Stay blessed. And I'm going to see y'all next time on Blessed to Invest.
Just to see tomorrow is a blessing. Stay prayed up is the message. Everything about a nigga blessed. Everything about a nigga blessed.